But talk to us about your current focus, which is ground up development, which is a lot different from value add multifamily. Please talk to us about that kind of transition, and tell us about certain recent deals you're working at, or any deal that you've put through a full cycle of ground up development.
Absolutely. So you don't have to go very far, even like 7 to 8 to 9 years back from now, like early 2010s. If you see the cap rates on Class A, B, C, Class A used to be around 5 cap, Class B around 6.5, Class C 8 to 10, right? Which is how the world should work, because all these are not the same products. If you see Class A product versus Class C product, you have to do a lot of maintenance, a lot of upkeep in Class C versus anything else. And the collections, the credit quality of the tenants is vastly different from A to C. And if you see the collections, right? I mean, them actually paying is vastly different. So everything is different between A, B, and C, and they have to be priced accordingly, right? The risk of execution is much higher in Class C. That's where they used to trade at 8 to 10. But now if you see the marketplace, again, due to the hyper money supply in this country, all these A, B, C, they're all sitting on top of each other. They're all 5 cap or less. Some markets even 3 caps, right? Even a C-class property can trade for a 3 cap. So this is not how it is supposed to be, because like I explained, they're all different animals, A and B and C, and they are no longer priced the same way. So now we have to ask ourselves, like, can I realistically go buy a 4 or a 5 cap C-class property, deal with that C-class tenants in middle of a pandemic? And mind you, that the C-class tenants, 60% of the people who still lost jobs and don't have jobs in this country right now are C-class tenants. 30% of them are B-class and 10 class is A. So disproportionately, the pain is concentrated in Class C tenants. Now, if they're hurting, how can they pay us rent? And to exacerbate things, even managing these tenants are becoming an issue, right? I mean, the crime spikes up. I mean, it happens everywhere, right? When you're in tough times, when you're in middle of recession, people get desperate and do desperate things. So these Class C properties, so if you look at what's the current situation, they're overpriced, way overpriced, like from the beginning of the time, right? And they're hard to manage and hard to collect money and hard to turn a profit, right? There are some markets here and there which bucks the trend because of the rent growth, right? Let's say if you see Huntsville, Alabama, Phoenix, Arizona, Idaho, right? Spokane, Idaho. All these handful of markets are bucking the trend and producing some 10% rent growth. Everything works at 10% rent growth, but we don't know how long. But barring those few markets, the story remains. It just doesn't make sense like it used to buy a C or a B class property, paying 4 to 5 caps, dealing with those tenants in their current situation. It just doesn't make any sense. The risk to reward ratio is not there like it used to be. So, but if you look at construction, you can still build for, yes, lumber is going up. You Canadians have to work hard a little bit more and send the lumber our way, because it became 4x. It added about 10 to 15.
Here too, the lumber price has gone up here as well. There's a big discussion with a lot of developers and groups that I'm part of.
Absolutely. So yes, lumber is going up, but everything else is good in the construction, right? If you look at the interest rates, historically low, and the Federal Reserve and the federal government is suppressing them and will continue to suppress them, because if they were allowed the interest rates to raise, it's a pandemic, right? And there'll be a new pandemic where all these properties are worth 10 cents on a dollar, right? Because everything is pegged to the interest rates. That's why people are able to comfortably buy and sell at 3, 4, 5 caps, but they cannot let the interest rates rise. So we have that. We don't know for how long, but at least for next 3 to 5 years, we have this window where these low interest rates are almost guaranteed. And the second thing is, thanks to COVID, a lot of people are just moving out from these coastal markets and the rural markets, and they're hitting up these Sunbelt markets. And we suddenly have this influx. I mean, if you look at Phoenix, right? In 2020, Phoenix received 89,000 new people coming into the city. And not all of them came from, most of them came from California, but some of them would have come from a rural part of Arizona too, right? So they're coming here and then they're demanding these houses. I mean, you cannot just produce that many houses just like that because somebody showed up, right? So there is a scarcity of single family. The worst thing that you, as a developer of multifamily, the one you fear is single family. If there is a hyper supply of single family, you're done. You can never compete with it, right? So, but luckily, again, right now, there is this terrible scarcity of single family. It's so expensive to build single family. And that is a receding concept, right? And 50 years from now, maybe nobody will build a single family, right? Because it's so damn expensive, the labor, the lumber, the copper, and the land, and the whole 9 yards, right? So that gives you this captive class A people who are trying to rent from you. And it's not like they move in and 6 months from now they'll go buy a home kind of thing. That was always the worry. Especially if you try to build in Texas, where the land was so cheap, and building people were able to deliver homes at 150, 160 a door, entry level homes like 1,600 square feet. That was always the worry with the Class A. As soon as the interest rates drop, as soon as the single family prices drop, a bunch of Class A tenants will leave us and go into their homes. That was always the worry, but that's no longer the worry. So that's why Class A is really, really strong, right? The occupancies are staying high. The rent growth is actually a lot better in Class A than Class B and C, because they are the ones who got hurt less by pandemic. So just to summarize this thing, if you want to buy anything, a Class A, B, or a C, something existing, you have to pay 4 cap or 5 cap in any major metros where I would like to be in. But if I want to build in these same metros, I can do it for 6.5, 7%, even today. So you see the spread between what you'd pay if you are buying existing versus what you can build for. And again, the barrier of entry is much higher now, right? Because not everybody can get into the construction like they can on an existing property. So for that reasons, I would like to play in the construction field for the
Got it. Got it.